Hello grade 12. We're now doing task 13.8 on basic calculations on cost accounting. Okay, so this is for Tao Factory. So you're provided with a production cost statement. Tao Factory produced 10,000 soccer balls during the year. Now that figure is very important because you will be using it in the denominator of most of our calculations. There was no work in process either at the beginning or the end of the year, and the soccer balls are sold at 60 Rand each. All soccer balls produced were sold. So that means there's no finished goods stock. You are required to calculate the following and assume that all factory overheads and administration costs are fixed costs and other costs are variable. So our first calculation is direct material cost per unit. All we have to do is take the direct material cost from the production cost statement and divide it by the number of units produced. Okay, so we'll take basically the formula total direct material cost divided by the number of units produced. Okay, remember these formulae are easy, so you don't really need to swap them off. Direct material cost per unit is just what it is, the direct material cost divided by the number of units produced. So on the production cost statement, direct material cost is 100,000, and we're going to divide it by the 10,000 units to get an answer of 10 Rand. Okay, number 2, the direct labor cost. Okay, again take that the formula, total direct labor cost divided by the number of units produced. Remember, these formulas do not need to be written down. Okay, then the total labor cost is 150,000 in the production cost statement, divided by 10,000 Rand to get 15 Rand direct labor costs per unit. Okay, the next thing we have is total direct costs per unit. Okay, so we can take the prime cost because we know that prime cost is equal to direct material cost and direct labor cost. Divide that by the number of units produced. Prime cost on the production cost statement is 250,000 Rand. Divide by the 10,000 units to get an answer of 25 Rand per unit. Okay, alternatively, you could have taken your answers from number 1 and number 2, the direct labor cost and the direct material cost per unit, 10 Rand and 15 Rand, just added it up to get an answer of 25 Rand per unit. Okay, then the next thing we have is factory overhead cost per unit, and the formula is just factory overhead cost divided by the number of units produced. So it's 200,000 divided by 10,000 units to give us an answer of 20 Rand. Okay, so the total cost per unit. Okay, we can either take the answer from the production cost statement, which is 450,000 divided by 10,000 Rand to give us 45 Rand per unit. Alternatively, we could take our direct labor cost plus direct material cost, which is 25 Rand, plus our factory overhead cost per unit, which is 20 Rand, and it will also give you 45 Rand. So we could take, I'm just going to show you an alternate calculation. We'll take our direct labor cost per unit plus our direct material costs per unit plus our factory overhead costs per unit, right? And we know from our answers above, okay, so that is 10 plus 15 plus 20, and that would also give us 45. Okay, number 6, so we have to calculate the selling and distribution cost per unit. So if you turn over to page 526, you've been given the income statement. And the income statement has a total selling and distribution cost of 50,000. Okay, so we're just going to calculate 50,000 divided by the 10,000 units, which gives us an answer of 5 Rand. Right? Sorry, I'm not showing a calculation here, but this is what it will be: 50,000 divided by 10,000. The administration cost per unit is 7 Rand. Okay, which is basically 70,000 from the income statement divided by 10,000 units. Okay, now our variable cost per unit will be the direct material plus the direct labor cost plus the selling and distribution cost. I've just abbreviated the formula for you there. So direct material was 100,000, direct labor 115,000, and the selling and distribution 50,000. Divide that all by 10,000 units. Okay, so it's Our final answer will be 30 Rand per unit. Okay. Alternatively, we could have done this calculation like this here. Okay. Remember, it's direct material plus direct labor plus selling and distribution. Okay. Okay, and direct material was 10 Rand if I remember correctly, 15 Rand, and the selling and distribution here 5 Rand. Okay, and if you add up all of that, you will get an answer of 30 Rand as well. Okay, so there are just different ways of doing the same calculation. Okay, number 9, you have to calculate the total fixed costs per unit. Okay, and remember that fixed costs are the factory overhead costs plus the administration costs. Okay, so the factory overheads 200,000 from the production cost statement and administration costs 70,000 from the income statement. Divide that by 10,000. Okay, and okay, you obviously don't have to show this step here. You'll get our answer of 27 Rand. Okay. Alternatively, you could have taken 7 Rand administration cost per unit from number 7 plus the factory overhead cost per unit from number 4 and just added them up. You would have also got the same answer. Okay, so we could have taken our factory overhead cost per unit plus our admin costs per unit. Here this is factory overhead cost per unit plus admin. Okay, our factory overhead cost per unit was 20 Rand plus our administration cost per unit was 7 Rand, and that would give us an answer of 27 Rand. Okay, then we move on to contribution per unit. Now contribution per unit is the selling price per unit minus the variable costs per unit. Okay, and remember that variable costs per unit, okay, direct material, direct labor, selling and distribution. I know I keep saying this, but you really need to just remember it. Okay, so selling price per unit, that was given to us, it was 60 Rand per unit. And the variable cost per unit were 30 Rand. Okay, I think we calculated variable cost per unit in number 8. Let's go back there so you can see it. Okay, so our contribution per unit will be 60 minus 30, which is obviously 30 Rand. Okay, and finally we're going to calculate the break-even point. Okay, and there's a definition in the textbook where it says that is the point at which no profit or loss is earned. Okay, and our formula: total fixed costs divided by selling price minus variable cost per unit. Okay, our total fixed costs will be fixed factory overheads plus administration, and then we have selling price minus direct material minus direct labor minus selling and distribution per unit. Now in this question we've already done all of these calculations, so we don't actually have to redo them here. But I'm just going to do it here as if we hadn't done those calculations above, because actually in exams you wouldn't have done all of that. Okay, so our factory overheads from the production cost statement is 200,000 and the administration cost from the income statement is 70,000. The selling price was given to us at 60 Rand. Our direct material cost 10 Rand. Direct labor cost 15 Rand and selling and distribution 5 Rand. Okay, and then you would just, okay, you wouldn't have to show this step in exams. Okay, to get our final answer of 90,000, and you must always, 9,000 units. Okay, that's all there is for this question. I'll be posting another video for task 13.9. Bye.